Bukky, let's look backtrack into the week and find out how the COVID-19 pandemic is impacting the fixed income markets in Nigeria.
Hi. So for the fixed income markets this week, we've seen it, being relatively quiet because not a lot of activities are being recorded in the markets. However, we've been seeing the few activities we've been seeing has been trending towards, being bullish. Like people are, the demand is significant, and this can be attributed to the level of money market liquidity, like you mentioned, and also the fact that, despite the fact that there was an OMO auction yesterday, only about 4 billion was sold out of the 177 billion that matured. So there's quite a bit of demand for treasury bills and bonds in the market.
All right. We also understand that as a fallout of the COVID-19 pandemic, we saw that the federal government suspended the April 2020 bond offer, the savings bond offer. Can you speak to this point?
Yes. So what we saw this week was a notice from the DMO to say that the funds they had been looking to raise through a Eurobond earlier in the year would now be raised locally from the bonds markets. And what we expect to see is for the next auction, a significant increase in the amounts that would be on supply, for the bond auction. And what we expect is that this should take bond yields back up. So the DMO would be looking to raise quite a significant amount, and this would mean that they would need to sell, to higher bids than what we saw in the previous auction. So we expect bond yields to go up.
All right, but how much do you think this is going to affect the debt levels? Because this DMO just recently came out with the debt figures for 2019, talking about Nigeria indebted to the tune of about 27.4 trillion.
I mean, we expect the debt levels to go up significantly, and this is because the federal government would need to carry out a lot of projects, a lot of activities to sort of jumpstart the economy again after the effects of the coronavirus, So we definitely expect that the debt levels would increase this year and even going forward into next year.
All right, then, but also looking at the liquidity, we've seen that has improved so far. How is that impacting the dynamics in the market?
Come again, CBN increased. I didn't get that.
No, I'm saying that we've seen improved liquidity in the markets so far. We've seen, with that 177 billion coming in and other maturities coming in as well. But how has that impacted the dynamics in the fixed income markets going forward?
Oh, so like I said, because of the increase in the liquidity, there's been a lot of demand because people need to deploy, this liquidity into assets to sort of improve their yields and their income, So we've seen demand, but on the other side, there has been no supply. And this is because from the CBN side, for quite a few weeks now, there hasn't been an OMO auction. And then even yesterday, only 4 billion was sold to the long end. So there's a lack of supply in the markets, and then there's demand. So basically what we've been seeing is yields going down, but no significant activity is being recorded.